Well, good afternoon, everybody. I would like to welcome you today and thank you for joining us today. We're doing as part of the Ask Professional series brought to you by the BBPA to support our community, particularly as we're going out and coming out of this quarantine. I'm your host today, and my name is Anton James. I'm a marketing, sales, and training consultant, and I'll be navigating this conversation today as we discuss the significant challenges within the business community. Um, with many members going through some financial, turmoil today, we thought it was be a great idea to help business get a better understanding or entrepreneurs as to what to do and how to navigate the system. Thus, we brought on to our great joy is Sharon Henry. Sharon Henry, I'm so sorry, Susan Henry. Dear Lord, have mercy. Susan Henry from Alterna Savings Credit Union. And she's going to help us today as we navigate the question of really what to do or small business, talk about small business lending, and as we create opportunities for entrepreneurs. So welcome, Susan. Please, first of all, forgive me for for calling the wrong name. How are you?
Fine, thank you. It's a pleasure to be here.
It's a pleasure to have you. Oftentimes, it's great to get such information that you're talking about today. I'm really excited to really go forward because oftentimes we don't have the key pieces of information. So, Susan, let's get right into it. So, talk to me about you, Susan. Tell us who is Susan?
Well, first, I'm a wife
Okay.
and I'm a mother of two young adults
Oh,
who are in their 20s. And, they're still keeping me busy today as they're trying to navigate life themselves.
mm,
I'm from an entrepreneurial family. So my husband owned a photography studio. He's partially retired now. My son started a production company 3 years ago, and they produce commercials for companies. My daughter is a recent graduate, and she's looking at self employment as a viable option for herself now.
very nice, very nice. Now, and well, with that, is that how you got involved with small business financing? Is that what motivated?
Well, partially, yes. It's the entrepreneurial spirit. My husband, when he started his business at that time, financing was a challenge. We found it difficult to get startup financing. We were able to creatively get the business started, but that sort of led me to where I am today and wanted to help entrepreneurs again navigate that process of getting financing.
Hmm. Okay, interesting. So you talked about your life, but what is your background?
Well, I'm actually celebrating this year 20 years at Alterna Savings. And, I've had the opportunity to develop and implement a community microfinance program for them, along with, leading its strategic direction. And, when we started that 20 years ago, there wasn't a lot of practitioners. Microfinance was not well known, and still it isn't. But for me, in that journey, it was around building relationships and connections to other practitioners. And that led me in 2007 and 2018 to think about sort of furthering my education in this microfinance space where it had limited practitioners. So I was fortunate enough to go to Harvard University to explore microfinance with other global leaders in that space to find sort of financial tools so that we could have financial inclusion for all.
Really? Well, that's quite interesting. That's wow. Harvard. I want to hear more about that. But you mentioned a couple things. You said alternative savings. You've been there for 20 years. Well, first of all, congratulations because that's a very rare thing. But tell me about alternative savings. Who are they? What are they?
Yes, so Alterna Savings is a financial cooperative.
Mhm.
I like to say it's the good in banking. It's been around since 1908, so more than 112 years ago. There's also Alterna Bank, which is the digital bank arm of Alterna Savings. And together they have 9.6 billion in assets under management. They're a full service member owned cooperative. They have about 183,000 members and a network of 36 branches across Ontario because credit unions are still provincially regulated.
Hmm, that's interesting. And so it's a credit union. Talk to me about what really, for those who don't know, what's the real difference between a credit union and a bank?
Mm. So, I mean, credit unions like Alterna member, again, they're member owned. That's the key word, cooperative. So that means they're owned by their members. So the members are the owners, and our members get to participate in a democratic structure. So they get to have this democratic voice and vote at our AGM. So they're voting for the board of directors, who set the framework for how we operate. They also vote on any bylaws amendments we have. Unlike traditional banks whose profits goes to the shareholders, credit unions like Alterna, they're a little bit different. Their profits go back into the community. They're reinvested into the credit union to ensure that we can provide better service, good rates, financial education, the community partnerships that we have, and things like our microfinance program, which is like for a credit union like Alterna, we're one of the first financial institutions to have such a program.
Okay. Now you talked about some of the programs that you're actually talking about. Um, so your programs it's different than the traditional banks. Well, how does the traditional financial institutions lend?
Well, they're a little bit different, right? Because the one thing a financial institution want to know, I mean, there's two fundamental things they're looking at. How are you going to pay me back? All right. It's about getting that money back. And that's important. And they're also looking at if you can't pay back, how are they going to recover that from that loan? So what security do you have in order to do that? That's extremely important for financial institutions. And many of them are, score driven. And it's not like they don't like doing deals. So it's really important. It would be what I call counterproductive for financial institutions not to lend. Because that's how they make some of their money, right? When they lend, the interest income is the revenue that they use. So it's not like they don't like doing these deals, but you have to fit into the blend that they work with. And so if we were to look at those blends, the first one is character. So most financial institutions are most concerned about your character, and that means how honest are you going to pay back that loan is dependent on your character. And that's why the two most fundamental questions are, how are you going to pay me back? So when they're starting to look at your character, the first thing they may do is to move to your credit history to help make that decision. Um, some lenders will also want to look at your qualifications, your experience, and your payment pattern. So character is extremely strong for them. Um, and then there's capacity. So lenders would like to know the financial ability of your business so that they know, again, they're going to get payback. So this may mean looking at things like your ongoing cash flow. What assets do you have? And remember, those assets are also there in case you can't pay back that loan. And, they want to know that you have the cash flow to survive in the short-term period, but they also are going to look at the long term. And the long term means how profitable are you going to be so that you can meet that debt obligation. Now, there's also collateral. I think I mentioned this a little bit, and that's around the assets. No financial institution want to own a bit your business. So you have to have what we call skin in the game. And that skin in the game means, do you have assets that the lender can consider if they need to, if you default and they need to get their funds back? So again, do you have equipment? Do you have a home with equity? Because they will look at that favorable as well. Do you have savings set aside? Those are the things that they're going to look at under the collateral piece. And then we look at things like capital. So capital is the money that you're borrowing, and the lender wants to know that this is not a hobby. If they're lending you these funds, that is going to help you generate more revenue growth. So they're going to look to see the financing that they're lending you is going to make your business sort of scale up or grow in a more profitable manner. And then they're also looking at conditions. And today, I think conditions are extremely important because we are in a sort of unprecedented times when we look at the pandemic we're in. And conditions are usually about what's going on in the national and local economy. So when we look at the crisis now, and you may be looking for financing to start a business or to scale a business, you may need to ask yourself, is this the time? Because that's certainly what the lender is going to be asking themselves. Is this the time for financing? You know, if we're seeing businesses shutting down because, you know, of the stages we're in, how are you going to make your business grow and make your business successful? So I think those are the things that most traditional lenders are looking at first and foremost.
Wow, that's a lot to consider. Before we go on, I just want to stop and give everyone an opportunity. If you, as we go along, if you have any questions, feel free to either raise your hand and I'll let you ask the question directly, or if you're a little bit shy, you can type them in the chat and I will actually raise the questions for you as you go along as well. Okay? So that's okay. That's interesting. So you mentioned really five, I guess what you would call five, what you call them the five C's. Is that correct? Is that
Yes,
what I heard you say?
the
Um,
five C's.
all right. So the five C's. Is there anything else above the five C's? Because most what I hear or you hear people talk about is what credit score. So is
Mhm.
it above the credit score or is credit score, and what exactly is this credit score? Because some people don't know.
Yeah. Okay, so you know, I was when we think of the five C's, the first thing I mentioned was the character.
Hmm.
And the credit score is sort of built into that piece. Like I said, I think that's the first thing that lenders look at to determine, should I move forward with this application? And sometimes that can be based on your credit score. So, you know, your credit score is, I like to say it's a scientific figure that, or a scientific number that shows your credit behavior. You know, how you handle payment in terms of how you handle credit in terms of making your payments, how much debt you have. So there's a few things that sort of make up your credit score. And that is like, how long have you been on the credit bureau, right? So how long have you had your credit report? How much do you owe? So for example, you know, if you have a credit card and your limit is 5,000, you know, are you at the max of that 5,000 or are you maybe at 30%, which is where you would want to be? You never want to max out your credit.
Mm, okay.
They're also looking at, you know, the payments. Are your payments made on time? So it's really important to make sure you're making payments as agreed every month, even if it's the minimum payment. You want to do so because when you miss payments, you're actually lowering your credit score, and you can lower those scores by 50 to 60 basis points um, based on that credit score. And are you exceeding your limit? So again, if you've got a credit card and it's 5,000 and you're over the limit, you are, you know, you're going to lose some points there. Most financial institutions, you know, look for credit scores of 680 and over. The average Canadian has a credit score between 700 and 720, and scores can range from 300 being very low to 900 being a very top score. I usually call that the Bill Gates of scores, right? So you want to make sure that you can keep within the range of the 700s if you can. Try not to fall under the 600s because when you do that, it makes it challenging to get financing. And it also means the interest rate you're going to pay could be higher than, you know, someone who have an average or above average score.
Very, very interesting. You see, 'cause a lot of times they don't really they just give you a credit card. They don't really tell you how these scores actually affect things. Very interesting.
Mhm.
Now you said it was 30%, so you should have a 30% balance. Interesting. Is that why? Do you find that's widely known by people, or and those some of those things you were talking about? Is that widely known or no?
When in microfinance, the one thing we do is financial education because over the years we found that, people would apply for financing, but they didn't know much about their credit score. And so we like to go out into the community and we like to educate people about credit and understanding credit so that they can prepare themselves appropriately because it's not widely known. I think it's getting better today because they're starting to teach this all the way from high school and up, but it was very challenging in the past. So it's really part of our performance to go out in the communities and provide this financial education so people are aware. So yes, you want to make sure you're not maxing out your credit. You're not applying for more credit than you need, right? Because, you know, people will usually take credit cards as they come. If, sometimes they're offered to you as a promotion and you'll take those, right? And not realizing that you're having too much credit. And sometimes when you have too much credit, it can hamper you getting the loan you're looking for because your debt service ratio is something that financial institutions will look at will now be lower than what it should be.
Oh, okay, okay. Well, that's good information to know. So, from the sounds of it, sound like you work with a lot of. You mentioned micro business, and you mentioned small business. Is that? Let's talk about that a little bit. Let's talk a bit more about some small business loans and micro business loans. Um, Help us to understand what are those and what they look like.
Yeah, so micro and smaller business loans, first we should look at are usually loans ranging from 500, up to 25,000. And in our portfolio, that's what it is. Internationally, it can go up to 50,000. And in some developing countries, it could be very, very small. It could be dollars. It's microfinance is a concept that is really from the developing countries because many of them get that type of lending to help them. In our own portfolio, we view micro entrepreneurs and small business entrepreneurs as those who are usually solo entrepreneurs. You could be incorporated, but many have less than 10 employees. Many of them are service-based businesses. They either have or they're ma and pa operations where they have a brick and mortar store but very small, or they're home based. So I mentioned my husband being a photographer. That's can be a service based business, right? So we find that most of our micro entrepreneurs, if I was to look at the demographics, 34% are Black, 72% are racialized Canadians. Many of those racialized Canadians are new immigrants to Canada. And we know that they're starting a business not always out of luxury, but more out of necessity because many of them don't have what is called Canadian experience to enter into the job force. So they start with, starting their own business. So we see many new immigrants in our program. Our program, we look at startups up from, from your concept. So once you have the business plan, up to 5 years. And that's typical of many micro and small entrepreneurs looking for financing because we go to 5 years to help them build that track record. So then they can move on to traditional financing. Many of them have, limited credit, like I said, a new Canadian, or they have slightly bruised credit. Again, not having the financial literacy to understand how to protect that credit, and especially, young entrepreneurs coming out of school who at one point did not have that type of education, and it was through those post-secondary schools that were where they were offered many credit cards. And like anyone else, they use them, and then without a job you can't pay them back, And that's how that cycle begins. So, helping them through education and giving them the ability to get financing to start, to start their businesses.
Yeah, you know what? That's really phenomenal because I remember when I was at school, I went to U of T, and I remember you'd pass by the commune place and you'd fill out one form, and on one form, you just check, check, check. You get up to like 15 credit cards. And some of my guys, I'd have guys that within 2 months, they've maxed all those credit cards up. And so I guess that starts the cycle. So, what happened? So, that's actually interesting.
I'm smiling because I remember that all too well. Yes.
Yes. So what happens when most of them go to start the um, go to start their business and they go to the traditional financial institutions? What typically happens?
Well, again, because they're not aware of their credit situation. So many of these individuals, before going into a financial institution, may not have known to pull their credit report, see what is on it, how can they correct it before applying. So they're not aware of what's on their credit report, and many may not even know. The damage that has occurred because maybe they've missed payments or they have too many cars. So when they apply, obviously, if they're applying through traditional financing and we go back to the 5 C's, we go back to the character, that's when it's going to be stopped right there and then. You don't have the credit score that the institutions are looking for. You may have items in collections you're not aware of. So, and all of these things is really what leads to them getting decline. And, I've heard from many entrepreneurs that they've gone to maybe 4 financial institutions before coming to us to get that help, to get their business started. So again, that's why I think it's important for us as leaders in this space to be out in the community, and that education piece is extremely important so that they're not going to those institutions when they know they don't have the credit to do so.
Hmm. Susan, that's a phenomenal point. Again, I just want to reach out to everyone out there. Thank you for coming through. Today, we're talking with Susan Henry, and we're talking specifically about how to finance small business loans, small business and micro business loans. Further on today, you mentioned that your organization, you're doing a lot towards helping the community and helping them with resources. Um, so how do you prepare people who are looking to borrow money? Like what advice would you give them? How do you counsel them? How do they, if they found themselves in that trap before, to get their self back on track?
Yeah. So, I mean, the first thing I would say, when you're looking for financing to start your business, and, you want to look at your personal credit score. So, if you haven't done so, the first thing you should do, and you should be doing this once a year anyways, is to pull your credit report. This is your information and it's free to you. So, the free portion won't give you your score, but it would allow you to see, how you're making your payments, make sure everything on that credit report is yours. So you want to do that and you want to go through it. If you want to see your score, then you have to go through Equifax, and I believe, there's a charge for that. There's other organizations now that offer to show you your credit score. I can't subscribe to that, so I'm not even going to mention their name. I'll only mention Equifax and TransUnion. Those are the two reputable credit bureaus that you want to go to first. If you're looking for traditional financing, make sure your scores are well over 650, 680 in the 700, 720 range and up. You also want to make sure that you have a viable business plan.
Okay.
And by that, you want to make sure that your plan has all the elements that a lender is going to look at. So they're going to look at things like your revenue. They're going to look at your marketing strategies. They're going to look at your cash flow projections. And when we think about marketing strategies, I know, Anton, you are in marketing consultant. those marketing strategies determine your cash flow outcome. So that's really important. So what is it that you're doing that's going to allow you to generate the revenue in your business? You also want to make sure that you can show profitability, because if your business is showing negative, and I'm not saying you would be declined just because it's negative, you would have to show, well, how are you going to pay back your loan if you are in a negative position? And most times the institution may think, well, you're negative, you don't have the cash flow to do so. So always try to make sure that you are trending positive, in terms of profitability. Also, credibility. So again, we talk about skin in the game. What sort of security do you have that you're going to place, in place of the business financing? What is it that you're going to offer? This is the time to start thinking about savings. For a lot of individuals who are not savings, those savings can come in handy to help you as that security piece, or buying assets if you can. And then you also want to make sure that your product is innovative, it's unique, and is in demand, right? You don't want to produce something that no one's going to buy. That's really important. So you want to be able to do your homework in terms of market and statistic research to make sure that your idea is viable.
Hmm. Okay, that's quite a bit of stuff. So there, let me make sure I understand. So the credit score should be at least 650, or you said 680. That was right?
Um, 680. I mean, for us in microfinance, we're not credit score driven, but I do know other institutions where, and it varies. Some have 650, 670, 680, because it's not just the score. There's other factors that's involved in there. Some institutions may look at your relationship with them. How long have you been a member or a client? They may look at, did you have loans before and you've paid those back in good standing? So it's not just the score, but the score is usually the what I call the block to whether you're going to move forward with those other questions.
Okay. Hold a second. We seem to have a question right now by Vita. Vita, go ahead and raise your hand. Go ahead. I'll bring you out, and you can raise your question.
Okay, thanks. Can you hear me?
Yeah.
Okay. So I just wanted to know for inquiries. So the first question is, how many inquiry is too many, and how recently are they looking at the inquiry? Is it in the past 12 months, in the past 3 months, or 6 months, and so on? So
Mhm. Yeah. So inquiries, that's a good question because financial institutions do not like to see a lot of inquiries. So, for example, in the month of October, if you decide you were applying to the four major banks and you got declined, when you go to another financial institution, many times they're looking at that and saying, wait, this person didn't get the financing. That means there was something wrong. I don't know if I really want to continue. And it also looks like you're credit shopping. And that can also show desperation on the applicant's part. So, and inquiries can also reduce your credit score. It can lower the points. And it depends on the type of inquiry. So there's soft inquiries and there are hard inquiries. So soft inquiries may be your utility company. You need to, get hydro or Enbridge or something like that. That's usually soft. Or you're renting an apartment, that may also be considered soft. But when you're applying for financing, those are usually hard inquiries, and they usually will reduce your score. I think you want to limit your inquiries. I don't even want to see inquiries every month. So, I don't have a number for how many you can have in a given month. I know Equifax and TransUnion can answer that. They know a lot of what goes into the score. But as a lender, I would say I don't want to see more than 4 or 5 inquiries, usually in a given year.
Okay. Thank you very much, Vita. Vita, sorry for your question.
yeah,
That was a great question. Well, speaking of score, so what can people do if they do have bruised credit to raise their score?
Mhm. That's a great question. So, if you want to improve your credit score, whether it's bruised or you just want to get it to good and over that, the first thing is to make sure you're making your payments as agreed, as I mentioned before, even if you're making the minimum, right? So some people might think, if I miss a payment, it's okay. No, it's not okay. If you miss a payment, you're losing about 50 to 60 points. And if you miss all your payments in a given month, you could lose upward to 150 points. So if we put that in perspective, if your credit score is 700 and you lose all your payments, you missed all your payments that month, which would be 150 points. Now you're under, right? So now you're in the lower 600s, which is not good. So you want to make sure you make those payments as agreed. You also want to make sure that your utilization level is, around 30%, if you can keep it there, no more than 50%. Sometimes, we have to use it. That's why we have credit and we have to use it. If you have to, make sure as soon as you can that you try to bring it to 30 to 50% and try to, or lower. It's almost best if it's at zero, but 30, 50% is at least where you want to see that. Your length of credit history is also important, and many people don't know this. So if you open your credit report 5 years ago, and on there you have maybe one credit facility, and it's a credit card, and we see all these promotional offers come out, and you decide, I'm going to close that card and take this promotional offer, you're actually closing off what is called your longest credit history. And now it looks like you're a new borrower again. So you don't want to just close that file that's been there for 5 years. You maybe want to pay it to zero and leave it until you've established credit under the new card that you have. That way you're not shortening the length of your credit history.
That's in,
And when I first heard that, I was like shocked, because
I didn't.
who would think about that, right? And again, the number of inquiries we talked about, we want to limit those. Don't be credit shopping, because it comes again as you're desperate. The first lender didn't give you the financing, so now you're moving on, right? And like I said, in our program, we've got entrepreneurs who said they've had four financial institutions turn them down. So you can imagine, usually probably in that month they've applied, they had four inquiries without knowing what's on their credit report. So it's really important, pull that credit report, sit down with, a financial lender who can go through it with you if you don't understand it. It's something that we do. We like to go through it to show you what it's made up of, and help you with that, so you're not applying and getting decline.
Okay. Um, I want to, before I go on, after I'm going to go on to financial literacy a little bit there, but I'll ask you a question because you brought something up that I didn't hear about before. You said, don't close your oldest credit card because that's your history. So, what is too much credit? What's the balance between too much credit and you're using too much?
hmm um so too much credit, again, this could go back to, when you're applying for that loan, and even if you have a good credit score, but let's say you have five credit cards and they're all 5 or 10,000. So you've got almost 100,000 in credit card debt. And when the lender is doing their what we call adjudication process, even if you're not using that credit, they do have to take into consideration the debt that you have, right? Because at any time you can utilize that, and it could show that you now can afford this loan that you're applying for. So you should, when how much debt really depends on your income. So if you're someone who has an income of 20,000, 100,000 in credit cards would be too much debt, right? So it has to be appropriate to your income level.
Okay, all right, interesting. Yeah, I think there's definitely a challenge that oftentimes, well, I know for a fact that oftentimes they tell us what access we have access to, but they don't educate us as to best use of best practices, what will hurt us, what will help us. Is just okay here. It's like a kid in a candy jar. We oftentimes we just go crazy. So what we actually need more is more financial literacy. Let's talk about financial literacy. There's a few things you mentioned earlier on.
Hmm.
You're a small entrepreneur. You said you have to have a business plan, a financial plan. Talk to us about that. What do you mean? Like, how would somebody know how to put those together?
Hmm. So, first I say business plans are important. And I often think they should be written by the entrepreneur, the owner, because it's your business. You understand your business. Today, entrepreneurs will pay to get a business plan prepared. But when they go in for that interview where the lender is going to ask questions, they can answer those questions. So even if someone's going to prepare your plan, you want to make sure that you are part of that process. And the business plan is important because I usually say, you won't go on a road trip without your GPS. You wouldn't build a house without blueprint. So you wouldn't operate a business without a business plan, because a business plan is going to tell you how you're going to get from start to finish and what that is going to look like. So, in your business plan, it's important to understand your objectives. You want to make sure they're clear, they're and concise, so that the lender knows exactly what you plan on achieving. You want to make sure in terms of your product that you have a product or a service that is capable of generating revenue, and that should be clearly outlined in the plan. Again, it's not a hobby. You're going in because you're running a business. This business is going to support yourself and maybe your family.
Uh-oh, we seem to have some technical difficulties here.
It could be generational. So this plan is really, there's many different business plan templates, but I think, again, making sure you understand your marketing strategies, your product, and doing your market research. So it's not good enough to say that, whatever business you're in, that is $1 billion industry. You have to show your statistics to prove how you're going to get a piece of that market share.
Okay, great. Um, Before you go on, it looks like Vita has another question for you. Vita, unmute yourself.
Yeah. Okay. There are some lenders that report the business account that report the product to your personal credit bureau, and then there's some lenders that don't report it to the credit bureau. Is that based on the relationship you have with the lender? Do you have any insights on that?
Yeah, actually, because under our community microfinance program, we do report if you get a loan and you're a sole proprietor or partnership, and the loan is up to 25,000. We do report it on the credit bureau. We report it for a number of reasons, because we find many entrepreneurs that we deal with, they don't have, they have limited or no credit. And this is an opportunity to help them boost their credit, right? And so we do report, because our loans can be considered retail or commercial. Small loans are usually on the retail books of lenders. And usually you're using what we call your personal capacity to borrow. And therefore you will see some lenders report that. If it's a commercial loan, that's a different entity. If you're incorporated, we don't report incorporated loans because, again, it's not the owner, it's the business, and that would be more of a business credit.
That answer your question, Vita?
Yeah, thanks.
Perfect, perfect. Um, so let's go back. You were mentioned earlier on about business plans. Within these business plans, there's other capacities. Was there something else that they need to expand on specifically? Like, does someone need to have specific training to make one of these um, business plan or a financial plan, or what else do they need to know? And what are the
Mhm.
components are you guys looking for?
So again, we talked about the business plan, and then obviously there are the financial plans. For many startup businesses, they don't have financials because they're in the startup phase. So usually it's what we call their projected cash flows, what they're projecting, what their business will achieve in terms of financial growth. So the cash flow is important for us, and it's important for the entrepreneur. It lets us see where they're going, and it allows the entrepreneur to see, usually I say if there's going to be a lean period, how are they going to sort of correct that? If you've been in business for a couple of years, it means that you have the opportunity to provide more financial statements so we could see how your business have operated in the past through those financial statements. There's organizations out there that will help entrepreneurs with their business plans and their financial plan. So I usually say, don't go it alone. You have to be part of that process. And usually that comes with what we would then say wraparound support. So before you see us, there are organizations that can help you with the plan, will help you with the financial plan. They often know what we're looking for. And they're in our community as well. And then once you get a loan through us, there's like wraparound supports. That you're going to need. So you might need mentor, you might need advisors. So you want to make sure that you have the capacity to have these wraparound supports be part of the process that you're in. Because like I said, it's needed before the loan and it's needed after the loan.
Okay, now you talked about this wraparound support. I'm not sure if that's so widely understood by people. Can you break that down a bit more? What you mean by wraparound supports? What they'll help you to produce? How they'll help your business?
Hmm. So, for example, when you're looking to put together your financial plan, um, do you have access to accounting services? It may not be a full accountant, but it may be an organization or someone who could help you, with your accounting. And the same could be for legal. Legal is extremely important when you're starting a business because you want to make sure that you understand any legal requirements that's going to be necessary of you in terms of regulations, certifications, and so on. So making sure you have that as part of your critical management process is important. And then we look at mentors and advisors and coaches. This is also important when you're starting or you're already in business. So there's many organizations out there that offer mentorship support from community colleges, all the way to other organizations. So being part of that. At Alterna, in our microfinance program, we offer wraparound supports like more financial literacy and education, financial planning, helping entrepreneurs understand that it's not just about the now, but they also have to think about their retirement. So how do they start having that financial plan in place? We also have what we call our webinar and podcast series for those who might need more marketing and sales support, those who might need to know about taxation. So we offer around 6 webinars per year to help. We also provide one-on-one sit down with entrepreneurs to go through their business with them, when they're ready to scale up. So that's the type of support, which is a little bit different from most financial institutions because it makes our program very administrative. But what I usually say when we provide these supports, so when we take entrepreneurs and we provide financial education and this support system, we're helping them set up for success. And when they succeed, we as an organization and as a community, we succeed as well.
And that's, I think that's really good, particularly as I said, when the community doesn't really understand the finances, what it takes to get a loan, what it takes to operate, and what it really takes to grow and scale. I think those are phenomenal resources to actually have. So let's step forward. But before we do, again, if anyone has any questions, feel free to either raise your hand or put in the chat, and I'll be, if you're a little bit shy, I'll have no problem asking the question for you on your behalf. But as we're transitioning, so assuming now that you're a small business and you prepared your documents, what are your financial, options? Like what options do you have in terms of getting different access to money?
Mhm. When we look at financing options for small businesses, I mean, first, I always like to say to entrepreneurs, know the type of loan product that you're applying for. It's important. So when we think about business finance, there's really two types of funding, and there's many variations to them, but the two are lines of credits and term loans. And you need to make sure you're asking for the right financial product for your business. So, lines of credits are very similar to your credit card, or your personal line of credit, where they revolve. You only pay interest on what you borrow. There's usually no fixed term, right? And it's usually for cash flow fluctuations. So you would use your line of credit, on your business if you find, your revenues and expenses are not aligning. So maybe, you're waiting for a contract to be paid, but you have to pay some expenses, or you got to pay for employee payroll. That's when you may need, your line of credit on your business. Your term loan, which is usually the most used product when you're starting a business, is when you need some fixed assets. So you might need a computer, you might need a vehicle, and that's when you usually will get that sort of term loan, and it's usually for growth, to help your business grow, whereas the line of credit is that fluctuation piece. In our microfinance program, we do have both term loans and lines of credit, but initially your first loan will be a term loan for a number of reasons. It helps to establish your payment pattern and payment behavior. It lets us see that. Um, and then the line of credit is usually based on your sales. So to get a line of credit, you usually need to be in business for, under our program, at least a year, so we could see what your revenues were, because it's based on a portion of those revenues.
Okay, all right. Very interesting. So you've talked a lot about your programs, your micro program, your small business program. Tell us, what does an ideal client for you look like?
Yeah, so I mean, I mentioned, I think previously, that we see those in the service sector, maybe the mob hops. We serve underserved, represented individuals. Many of our clients, they start out as low income. So by that, I mean, they usually have income of, 30 or 50,000 per year personally. And they may have no income when they're starting a business. Some may be on a government assistance program. They may be young entrepreneurs sort of transitioning from school to start a business. They may be new Canadians. The business may be in its startup phase. So those are usually, who we see. Typically, these are individuals who normally, have challenges, like the challenges I mentioned, getting traditional financing for the many different reasons. It could be they don't have the character piece, or it could be the capacity. So, when traditional financial institutions are looking at capacity, they're looking at, what is your income, what is your revenues previously. And many startups don't have that. They don't have what we call a demonstratable cash flow. So, and they may have limited contracts because they're now getting started. So many, again, our businesses are service mom pops. In terms of the Black community, we see 34% representation and 72% racialized Canadian. Many are women, so women are actually majority of our micro finance recipients, and I think I have about 58% women in terms of our program, in our program.
That's actually phenomenal. So you're able to help when really when a lot of the other financial institutions can't. You're able to, you know what?
Yeah, and that's why the program was started, right? Because we knew, we look for gaps that exist, in our communities, and we try to fill those gaps. So whether the gaps is through, a microloan, or providing that financial education that one may need before they get started, those are the gaps that, we try to provide. And I think knowing who we are in terms of our values as a credit union, and how we started was really around providing credit to underserved communities, and making sure it's all about, again, a hand up and not a handout, treating our members not as a transaction, but treating them as individuals with different times in their life cycles. All of that sort of feeds in and align to this program that Alterna created.
Well, you know what? I think that's actually phenomenal. Like again, 20 years been there, doing such a major impact. I think particularly in our community where there's a lot of challenges, people getting there. Can you
Mhm.
tell us give us an example? Talk about some examples where you've actually helped someone maybe take them from one stage to the next, or you've helped one where they've had some serious challenge. Talk to us a little bit about that.
Yeah, we have so many remarkable success stories under our program. To date, 20 years celebration, we've loaned out over 7 million to more than 1,300 entrepreneurs. And if I have to think of one in particular, I remember a female entrepreneur, single mom to 4 kids at that time. She was in the healthcare industry, and she needed financing to get her business started. And she was one of the individuals that had gone from, chartered bank to chartered bank, and couldn't get approved. Again, because she was low income, she didn't have the greatest credit to start, and she couldn't get that opportunity. So we actually started with a small loan at that time. It was at $5,000. And today, she's someone who's she's got more than 100 employees in her business, and she's actually also opened a private college to help new immigrants get their accreditation and get back into business. So she also have that give back factor. She's moved from micro to commercial, so she's more in our commercial department right now. And so we saw the growth in that business. It's a real good success story. There's so many more. Success for these individuals are very different. So it's not just about the bottom line for them. For some, it's about how can they create more opportunities for other individuals like themselves. For some, it's about how do they strengthen their community. I remember for one entrepreneur, it was how could she start her own business? Again, she was a single mom. She was on government assistance, and she wanted to pay for her son's university. Um, and so starting a business sort of gave her that opportunity, and she did that. And I remember he actually joined her business and sort of took it to another level. And you think about that generational piece, and there it was as well.
Okay, interesting. You have one more story you can tell us because sometimes by the word of their testimony they actually help people to relate to. You have one more story you can tell?
Sure. I mean, I'll look for a couple. So, we know this beauty industry for women. It's owned and operated right now, not by the Black community. We tend to buy our products from other people, and it's a more than $1 billion industry that we don't have ownership of. And I was fortunate to meet a couple. They were from Africa, and they were new immigrants to Canada, and they wanted to start their own sort of, and they're okay with me mentioning their name, Sweetwell Beauty Supplies, and they wanted to start their own beauty beauty store, and they're out in Pickering. And again, there was someone who went to other lenders and could not get the financing, and we gave them their loan, and subsequently other loans. And today they're building a franchise. So they have more than one location. And I was, during this COVID period was so difficult, and I was so worried about them. How are they going to, when their doors are closed, how are they going to get business? But through, again, we us reaching out to them and having conversations with them, they were able to pivot their business, and actually they're doing better than post pre-COVID. And their goal is to take back the beauty industry, and build franchises so that again the ownership is within the Black community.
Okay, it's actually phenomenal. Well, going forward, what do you want to see coming out of this? What would you like to see for for our community?
You
And
know,
and when people want to get more information, how do they get a hold of you to find out?
Okay, so first I'll tackle what do I want to see out of this. I reflect back on my background, which is West Indian. Particularly, my parents are from Barbados. I was born in England, but spent many years growing up in Barbados. And what I saw was this entrepreneurial spirit, right? And again, it could be out of necessity that people there were entrepreneurs. That was how they survived. And, I think about the flexibility and the freedom and the ownership piece. And even though I was young, when I reflect on that now, I think that's what I want to see for our community: the ownership, the opportunity to create your own path and go through that path. And also the opportunity to leave legacy behind for our generation. And that's why it's so important for small businesses to have a succession plan so that it can be generational for us. So this is a passion of mine. I am committed to working with entrepreneurs, and this is what I want to see. If you need more information, about the Alterna Microfinance Program, you could find us at microfinance, Alterna at microfinance.ca, or you can reach out to, you can look us up on our website, alterna.ca. You'll find the microfinance program there. And I also want to say I am happy to speak to anyone on the call who just want to have a conversation. I will definitely make the time, and I know there's others at Alterna within our team that would make the time as well, to help guide you, on the road to succeeding in your business.
Okay, that's absolutely phenomenal. So people can actually reach out to you personally if you want, are you?
Yes, you can reach out. My email is susan.henry@alterna.ca, or microfinance@alterna.ca. That's where you'll find me. I will get it there from both.
Susan, I thank you so much. You know, we really appreciate you helping us. We really appreciate your commitment to the community and looking to help, especially our small businesses as they're going forward. I'm about to turn it over to Uju just right now with the BBPA as we talk about what's coming forward. But to everyone that participated today, I thank you so much for participating in this and making this a success. Over to you, Uju.
Thank you so much. And thank you so much, Susan, for the very insightful episode today. I'm sure that we learned a lot and all of our questions were very appropriately answered. So thank you. We do this, like Anton said, we do this every week. So next week we have another special edition that will be coming on, and that is around mentorship and the power of mentorship, because we understand that one of the challenges of the people in our community is, apart from access to capital, is access to the right networks and the right mentors. And so ahead of a program that we'll be launching called Mentor Me in November, this Ask a Professional episode next week is a preamble to the launch of that program. So I'll really advise you to register for that. The link and all of that will be available right after this. And so it's we'll be dealing with, we have people on the panel from Starbucks, from Say Cloud, which is another organization that is responsible for also mentorship. So there's a lot to unpack and to learn. We'll be talking about the myth of mentorship, the outcomes and the results of successful mentorship, and also information about the mentorship program called Mentor Me that will be launching in November. So yes, looking forward to having every single one of you on the program next week, Wednesday as well. Thank you.
Thank you, everybody.
Have a good day.